Is Bitcoin going to $72,000? Is Ethereum going to $3,600? Well, I'm going to tell you why I believe that both of those things are highly possible in the very near future. Stay tuned. What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Please, before we get started, subscribe to my channel, hit that like button, and check out everything I have to offer in the description, which includes my newsletter and my amazing sponsor, Femex, who will give you some free Bitcoin for signing up. Now, as I touched on in the beginning, we're going to dig into the charts, and I'm going to tell you why I think that those targets, 72,000 for Bitcoin and 3,600 for Ethereum, are highly likely. I'm also going to review all of the news that's driving markets today. I want to dive right into the charts. First, take a look here at the Bitcoin daily chart. As I discussed last week, we had a test of the 50 MA here on the daily, which has been a very, very reliable support throughout history. And even when price breaks below it, it does not stay there very long. So that was a very, very good entry if you were looking to buy the dip in what is obviously still a bull market. Turning bearish now to me is somewhat absurd. Once we get above 61,788, assuming that we do, which is the previous all-time high, we should return back into price discovery. Now, zooming into the 4-hour chart, you can see that we have broken resistance, and this consolidation and downtrend is now officially over from a technical perspective. Not only that, we broke it, had 1, 2, 3, 4, 5 candles testing it as support before exiting on decent volume. The 4-hour also flipped both the 200 and 50 MAs, which are both curling back up, showing that we are likely in a new bullish trend. Now I'm going to tell you why I think Bitcoin's going to 72,000. As you can see here on the hourly, on the line chart, sometimes I like to eliminate the candles to eliminate some of the noise. Much easier to draw patterns on a line chart. We had a very clear bull flag, and based on the length of the flagpole, if you extrapolate from where we broke out, the target is here, $71,659. That's how you trade a bull flag. You buy the breakout or the retest if it happens, and your target is the length of the flagpole. An argument could actually be made for higher targets if you start the flagpole here, but I'm not going to go ahead and do that. I'm going to keep it conservative at around 72,000. Now, what's really interesting here is that we're also seeing strength in Ethereum, both against the dollar and against Bitcoin to some degree. Let's take a look at Ethereum against the dollar here on the weekly chart. As I have been saying literally for months, you wanted to enter at 14.19, a retest of the previous all-time high as support. That was a perfect entry. Yes, it wicked down below a bit, but it's held as support on both the daily and weekly charts, and now seems to be heading up. Much like the Bitcoin chart, you're looking for price discovery here. So the safest entry technically would be above $2,041.42, the recent highs. Now looking at the daily chart again on Ethereum USD here, we can see why I think it's coming up here to $3,600. We have a clear bull pennant here. Now, yes, bull pennants often break down and become flags, but for now we have a bull pennant that looks to be pushing against resistance. Based on the length of this flagpole on a logarithmic chart, that's why this looks smaller than this, because it's based on the percentage and not the absolute dollar move. We have a target of $3,600 if it breaks resistance, and depending on where it breaks resistance. That would be if it broke at around 1846, it could come down, break lower, break a bit higher. What I love here, and something I use all the time, is I drew a pattern on RSI, right? I drew this resistance, and we have a break of this resistance on the daily, and those breaks tend to precede price action. We had the same thing on Bitcoin recently. The RSI resistance broke a day before on the daily, then the price resistance broke. So now that we have a clean break here, I will be watching for price to follow. Let's take a quick look at Ethereum on the Bitcoin pair. I love this chart. I really do. We had a clean break of this descending resistance, meaning that the downtrend is technically over for Ethereum. What's more, we had this beautiful bullish SFP, a wick down below the previous swing low, finding liquidity, moving up, retesting, and heading up. That means that there is a ton of buying interest in this area. Now, we had a break. It wasn't that strong, but now we have a clean candle push up. We're well above support. And today's candle, leaves a bit to be desired so far, but it's way too early to tell. Regardless, we do have a break of the downtrend and a beautiful test of support on Ethereum. So I think that Ethereum could potentially outperform Bitcoin in the coming days and weeks. I also want to take a look at something really, really interesting. This is the dollar chart. As you can see, The dollar is showing immense strength here, breaking through resistance, breaking through supply, and continuing to head up with absolutely massive candles. Now, my view on the dollar is still somewhat bearish on the monthly after breaking down this chart. This could be coming back up for a retest before heading down, but you cannot argue that the dollar on the daily chart here continues to look bullish. Now, why does that matter? Because usually when the dollar goes up, literally everything else goes down. Dollar strength usually means asset weakness, right? There's an inverse correlation between the dollar, stocks, metals, and historically Bitcoin. But what have we seen of late? We have seen Bitcoin continuing to rise the past few days as the dollar has risen. Here's a chart of Bitcoin versus the dollar. You can see that there's been a loose inverse correlation over time. It's very, very clear. Every time there's a peak in one, there's a valley in the other. Well, that was true until about here at 37,000 for Bitcoin, but now the dollar has continued to rise and Bitcoin has continued to rise with it. That means there is a very clear separation of Bitcoin being correlated to other assets and being inversely correlated to the dollar. This is exactly what Bitcoiners have wanted and desired since the beginning of time. I think that it's always generally been the case, but now the case is exceptionally clear. Now to dive into some of the news that's driving the markets today. First, the biggest news after seeing Visa yesterday announce they're going to use stablecoins for cash settlements, we have PayPal launches crypto checkout service. It is all happening. We knew that they were talking about it, but now it's being actually put into action. PayPal Holdings Inc. will announce later on Tuesday that it has started allowing U.S. consumers to use their cryptocurrency holdings to pay at millions of its online merchants globally, a move that could significantly boost use of digital assets in everyday commerce. If you want to buy something on PayPal, there's going to be a buy with cryptocurrency button right next to the normal button for 29 million merchants in the coming months, just in the United States. Imagine when they roll this out worldwide. We've posited, we've debated, we've talked about mainstream adoption. Will it ever be used? I think it's happening. 29 million merchants will be accepting Bitcoin and other cryptocurrencies from willing customers. Now, whether you choose to spend your Bitcoin on goods and pay the taxes as a sale of your Bitcoin, that is totally up to you. Not something I will personally be looking to do, but the very fact that PayPal is committing so heavily to this and that this is happening on the tail of the Tesla news and the Visa news and the endless cascade and flood of news that we're seeing is incredibly bullish. We are in the first inning, maybe the first batter of this bull run and of adoption. So once again, do not be a jackass and short or sell your Bitcoin now. This thing is going to the moon. Now, this story is not crypto related, but it's an update of something we discussed yesterday. And I think that it is absolutely one of the most astounding stories that I have ever read in financial markets. One of the world's greatest hidden fortunes is wiped out in days. Yesterday, I reported that last week, Thursday, Friday, that Goldman and somewhat Morgan Stanley were executing huge block trades, $10 billion worth of stock at a time, moving legacy markets as if they were illiquid altcoins. We were seeing huge companies move 30, 40% in a day on drops, and nobody knew why it was happening. Of course, there were bad takes that Goldman was selling stock. That was not the case. They were obviously facilitating it for Bill Hwang, who had a vast fortune and somehow nobody knew about it. But let's talk about how that even happens and whether this might be the largest margin call in history. So just one part of his portfolio was liquidated last week, and that was worth $40 billion. People are trying to put it together and piece it together. They think he could have already lost more than $100 billion fortune that nobody knew he had. Now, this happened on a cascade of losses due to high leverage and margin calls, perhaps the largest margin call in history, as I said, and serves as a lesson for all of us as retail traders that even at the highest end, leverage is extremely dangerous. What's crazy is this entire cascade of margin calls and him having to sell to cover was basically just triggered by like a 9% move on Viacom CBS. But he was so concentrated in entertainment in that area that the Viacom news caused drops in other stocks that he was invested in. forcing him to get margin called and cascading. Now, this is not unsimilar to what we've seen on leveraged crypto exchanges when it starts a cascade of positions where, all of a sudden shorts start getting liquidated, pushing price down or pushing price up in a long squeeze, or pushing price down when longs start to get liquidated over and over again until price just has to drop. That's basically what happened to this guy on his own. But what's crazy is that this guy was a known market manipulator. He was basically kicked out of the hedge fund world 10 years ago for, illegal or borderline practices, insider trading, all of this. I mean, the story is so crazy. And it says one reason that he never filed a 13F report of his holdings, which every investment manager holding more than 100 million in US equities must fill out at the end of each quarter, is because he appears to have structured his trades using total return swaps. What does that mean? That means he puts the positions essentially on the balance sheet of the bank instead of on his own. Also, he was running all of this through a family office, and family offices do not have the same financial regulations as bigger funds. This story, I mean, it is just absolutely crazy. He accumulated these huge positions and he did it all with derivatives and leverage without ever having to report it to regulators. So once again, this serves as a lesson to all of you. Leverage is extremely dangerous. And even when you've amassed a fortune of well over $100 billion, if you are over leveraged too much, they say he was levered about 6 to 8%. 6 to 8x, that even one stock dropping about 10% could send a cascade that liquidates your entire fortune and lets you have fun staying poor. Thank you, everyone. That is everything today. Please, again, subscribe, smash, as they say on YouTube, that like button, sign up for the newsletter, and check out Femex. Until tomorrow, peace out.